Over the past 10 days, on a cap-weighted basis, over 70% of our portfolios reported earnings. So a lot to digest. I'll try to distill a few of the key learnings in this brief monthly update. The first thing to point out is that June quarter results were all about the comp. This was the first quarter that lapped the first full quarter of impact from COVID last year. And for some companies, the comp was to their benefit, and for some it was a headwind. There were lots of management teams pointing investors to focus on the annualized revenue growth rates on a 2-year stack. So we'll go through some of that right now. In digital advertising, in contrast to the Amazons and Netflixes of the world, these businesses proved their cyclicality last year. And you can see that here in this chart with Facebook and Google ad revenue decelerating pretty massively a year ago, albeit still performing much better than we had originally expected. Fast forward to today, and these players have really seen a V-shaped recovery in revenue. Many people have pointed out that on a relative basis, Google's results were superior to Facebook, but again, they had a much easier comp. Ultimately, both businesses this quarter really marked peak year-over-year revenue growth. But I wanted to highlight something that Mark Zuckerberg gave a lot of airtime to during the Facebook call, and that was the concept of the metaverse. So you can think of the metaverse as a place where you can socialize with friends, play, work, and even conduct commerce, all within a virtual environment. And the metaverse is a concept that video game publishers are talking about. Microsoft and NVIDIA are talking about it as it relates to digital twins and the Internet of Things. Well, Facebook thinks they can be a major participant here too. Now, of course, this is a long-term vision, but in the meantime, Facebook is focused on building out a full-stack commerce platform from discovery all the way through payments. And they're also focused on building out creator tools across things like video, podcasting, and publishing. And if Facebook can put the economic incentives in place to make the platform attractive for merchants and creators, paired with their existing social network and their lead in virtual reality, then you can see how Facebook does have a unique set of assets for this metaverse vision. And I know this is a wordy quote here, but I think it's important to understand Zuckerberg's strategic vision. He's been so focused on anticipating the next computing platform, with his emphasis really being virtual reality. And if you recall, it was not a given that Facebook would make the transition from desktop to mobile. Facebook's destiny, to some extent, was in the hands of Apple and Google, the gatekeepers of the mobile operating systems. And you can see just recently the risks associated with that, with Apple's changes in iOS 14 around app tracking. So Facebook wants to control its destiny as we transition to the next computing platform. On to Amazon's quarter, softer than expected top-line results, but I think underneath the hood there is a much more positive interpretation. So here you can see that although retail and subscription growth decelerated, again with a very tough comp from a year ago, the high margin revenue streams of AWS and advertising actually accelerated. Now for those hoping AWS and advertising would drive a beat on operating income, that high margin revenue did not fall to the bottom line because Amazon continues to invest aggressively in capacity. And according to management, Amazon is still trying to catch up with elevated volumes. For those who have owned Amazon for years, you are probably familiar with the concept and sensation of delayed gratification as Amazon invests profits into growth. Ultimately, we think this is a long-term positive for the business, and our thesis continues to be that high margin revenue streams will drive substantial profit growth in 2022 and beyond as Amazon completes this investment cycle. Real quickly, I wanted to touch on ZoomInfo only because we highlighted them in a previous monthly update, and they just reported last night very strong results, so I thought it was timely to highlight them again here. This is a business who has significantly expanded their addressable market in just the last year, most recently with the acquisition of Chorus AI in the conversational intelligence space. And the applications being introduced on top of the data layer are making the platform even more strategic. And we're seeing that play out in record retention this quarter. And for those of you who might be familiar with the Rule of 40 benchmark in software, which is revenue growth plus free cash flow margin, ZoomInfo is operating at a rule of 109% with 56% revenue growth and 53% unlevered free cash flow margin. And we think ZoomInfo's results are indicative of an even bigger trend, which is companies leaning into data-driven decision-making. And we think this is part of an even bigger story as it relates to the emergence of modern data architectures, things like Snowflake, for example. Real quickly, wanted to touch on semi-equipment since this is a space we've talked about previously, and another strong quarter and a positive read-through this time from KLA, who management remains confident in sustained demand into 2022. And then finally, very big news in the payment space. Just the other day, Square's proposed all-stock acquisition of Afterpay, which is a leading player in the buy now, pay later space. And when the news broke on Sunday, we were initially a little surprised just because PayPal was able to so successfully build and distribute its own buy now, pay later solution organically. But the more we looked at it, the more we think there are some pretty compelling synergies here, especially as it relates to connecting Square's seller and Cash App platforms and creating a two-sided network similar to what PayPal has achieved. So for instance, imagine managing your installment payments directly in your Cash App, or searching for merchants within Cash App, driving lead generation for Afterpay. Square can cross-sell Afterpay into its installed base of millions of merchants. Square can introduce its seller solutions to Afterpay's 100,000 merchants. Square can introduce Afterpay's 16 million consumers to Cash App. So, those are the examples. There's just lots of synergies here. And then finally, this provides Square's seller business with international and online exposure, both of which were previously lacking. Finally, what to watch for? A few things to anticipate the next few months. The Fed's meeting in Jackson Hole in late August. It's going to be interesting to get the Fed's latest view on inflation. They could potentially use this as a forum to elaborate on the path of tapering. And then we're also focused on any more shoes to drop with regard to China's regulatory reset. So China has made it clear they want to balance security and growth, even if that means inflicting a little pain in the capital markets. China's primary objectives are controlling data, especially potentially sensitive data that resides within their big tech platforms. And they also want to rebalance the share of corporate profits and wage income in order to address income inequality. And then, of course, we'll be watching for more earnings results. So it's been a busy few weeks. We couldn't get to everything today, but we'll be back next month with more stock and Fed updates.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.